Hello everyone, and welcome to today's video, where I'll be sharing with you how I manage risk as a Forex trader. Before we start, I'm preparing a longer video where I'll tell you how I lost over $50,000 due to not following the rules of Forex trading. Let me know in the comments if you are interested in such a video. I would like to share with you a few years of bad and good trading experiences. As you know, Forex trading can be a very lucrative business, but it can also be very risky if you don't know how to manage your risks properly. So, let's get started. I always start by setting up a risk management plan before I make any trades. This plan includes my trading goals, my risk tolerance, and my exit strategy. Having a plan in place helps me stay disciplined and avoid making emotional decisions that could cost me money. To determine my risk tolerance, I use a simple formula that takes into account my account balance, the percentage of my account I'm willing to risk per trade, and my stop-loss distance. This helps me determine the lot size I should trade, which will limit my potential losses to a predetermined amount. Once I know my lot size, I determine my position size based on the stop-loss distance and the entry price of the trade. This helps me make sure I'm not risking more than I'm willing to lose on any given trade. Another crucial tool in managing risk is the use of stop-loss orders. I always place a stop-loss order on every trade I make, which helps me limit my losses and exit the trade if the market moves against me. This helps me avoid emotional decisions and stay disciplined. In addition to stop-loss orders, I also use take-profit orders, which help me exit the trade when the market moves in my favor. This allows me to lock in profits and avoid the temptation to hold onto a trade for too long. Another tool I use to manage risk is the trailing stop-loss order, which allows me to move my stop-loss level as the market moves in my favor. This helps me protect my profits and limit my losses if the market suddenly turns against me. Finally, I always diversify my trades by trading different currency pairs and using different trading strategies. This helps me spread out my risks and avoid putting all my eggs in one basket. So, in summary, here are the key points to remember when managing risk as a Forex trader. Start by setting up a risk management plan. Determine your risk tolerance and position size before making any trades. Always use stop-loss orders to limit your losses. Use take-profit orders to lock in profits. Consider using trailing stop-loss orders to protect your profits. Diversify your trades by trading different currency pairs and using different strategies. And there you have it, folks. Those are the key strategies I use to manage risk as a Forex trader. Remember, the key to success in this business is to stay disciplined and manage your risks properly. Thank you for watching, and I'll see you in the next video.